I'm going to start I'm going to stretch out my introduction here just a minute, just as people are taking their seats. I've been looking forward to this panel for a few months since they all agreed to do it, because there are, I mean, it doesn't get much more fundamental than money. Everything's built off it. It is a very easily misunderstood issue. We have with us really the pioneers. They represent the pioneers in the changes in the system, actual and potential, with a rich and, my experience, comprehensive understanding of not just the opportunities, but some of the risks and how they need to be addressed. And I'd be remiss if I didn't acknowledge Stefan Ingves, who is in the audience, who has also helped lead this from the start during his tenure at the Reichsbank, and actually many others. I look around, I can't name them all, but joined by Governor Das of the Reserve Bank of India, and of course, the India tech stack and the innovations there have delivered great benefit to more than 1 billion people, but have been a lesson for the rest of us and increasingly applied around the world. I'll invite him in a moment. Governor Bailey, the Bank of England, one of the, as I say, pioneers here, formed the core under his leadership group of a number of developed economy central banks looking at future of central bank digital currencies, huge research project and policy project at the Bank of England in and around that. And of course, as we all know, the Bank of England is at the center of the global financial system. I just want to put that, sorry, just thought I'd slip that in, that acknowledgement there, Mr. Governor. And Agustín Carstens, I think people will know this, but I just want to underscore, building on top of his long career and successful career as a central banker, as a minister of finance in Mexico, when he became the general manager of the BIS, wow, 9 years ago, is it? 7 years ago, 7 years ago. His first priority was to create what was called modestly an innovation lab at the BIS, but really go to the heart of the financial system and the workings of the financial system. And a number of the innovations that we have seen and were referred in the earlier panel, mBridge being one example, Nexus, others, have come from that, and thinking above and beyond where the system is going through the Finternet and other elements, Agustín. So we couldn't have a better group to discuss these issues, and I'm going to leave it to each of them to take it in whatever direction they wish, roughly 10 minutes each of remarks, and then we'll open it up to your questions and comments. So Governor Das, please.
Well, thank you. Thank you, Mark. Good to see you after a while.
Yeah.
And good afternoon, everyone. The topic today is future of money and payments. So the first observation I would like to make is that the shape of money and future of payments is it's going to be influenced largely by the rapid advancements that we have in technology in this particular space. And I would like to highlight on two aspects. One is the fast payment systems. In the case of India, it is the UPI, the Unified Interface. And I would like to highlight on the efforts of India and few other countries on CBDCs, that is central bank digital currencies, where we have launched a pilot project, a pilot 2 years ago. Now, coming to first the fast payment systems like UPI, India is one of the pioneering countries. UPI basically in India has ensured high efficiency, and it has brought in high efficiency into the payment system. The payments are safer, faster, instant, and cheaper. And today the number of transactions that take place in UPI per day is about 500 million transactions per day. and that's a whole, that's a huge amount of, a huge number of transactions. But then we are trying to even step it further, and the idea is to reach 1 billion transactions maybe in the next few months. The number of transactions were about 300 million about a year ago. Now it has reached 500 million. Now that is so far as the number is concerned. UPI has got actually a lot of potential for cross-border payments. We have also taken the initiative of linking the UPI of India with the fast payment system of other countries, and we have started the process by linking the Singapore fast payment system, that is Pay Now, with the UPI of India. And the effort is on to have similar arrangements with other countries. And on QR code based payments, we have linkage already with countries like Mauritius and countries in our part of the world like Sri Lanka, Bhutan, Nepal, and we are in discussion with several other countries in the Middle East and in Asia to have this linkage. So for cross-border payments, UPI has proved its efficiency, and this will be particularly easy, very useful for students, for travelers, business travelers, for tourists, and that's it. The third point I would like to mention in the context of UPI is that we have now attempted and actually put in place a method for offline payments. You see, in a large country like India, the availability of connectivity, the connectivity is a problem in remote areas where either the connectivity is weak or it is simply not there. So we have now facilitated offline transactions on the UPI. And the UPI, we are in discussion, as I mentioned, with several other countries. Going forward, I see UPI, the linkage of India's UPI and the fast payment systems of countries, not only in our region, but coming to the other parts of the world. In fact, in France also already in a few places, it is launched in Paris. So therefore, this can actually make global cross-border payments much more efficient than it is today. Now turning to CBDC, the central bank digital currencies, the e-rupee pilot was launched by us sometime in November of 2022. We started first on the wholesale mode, and then within a month we started the pilot on the retail mode. And today it's a pilot project, and we are in no great hurry to immediately announce a nationwide rollout, because we want to do the trials, fully convince ourselves about the design features, about the robustness, about the security of our CBDC, and then only think of a nationwide rollout. Now, today we have about nearly about, let's say, 6 million users in the retail payment in UPI, of which about 5.5 million users are the retail customers, that is individuals, and about 500,000 are merchants, shops, and other establishments. The trials are going on. Every day there are learning experiences, and we are constantly fine-tuning our system. Now, I have been asked this question as to, if UPI is working so well, why do you go for a central bank digital currency? The key difference between the two is that UPI is a payment system, whereas the CBDC is a currency. It's a liability on the books of the central bank. And it's not only a liability in the books of central bank, it also involves, it is just a replacement for paper money. In India, what we have done is that the issuance of the digital currency, the CBDC, we have the intermediation of the banks also, as it is in the case of the paper currency. Now, I have heard this question also at times that, whether the banks will join or whether the banks will demand a particular commission. Now, it is identical to paper currency, where we issue the notes to the banks issue it to the customers. Here, central bank generates the digital currency, the CBDC, the banks draw it, and the banks give it to their customers. The banks facilitate in creation of a wallet and then transfer the money into the wallet of the customer. The key advantage in this is that unlike a paper currency, you draw the cash and you keep it in a, in your wallet, in your, that is your physical wallet. In the case of CBDC, you can draw it instantly, and at the end of the day or whenever you want to use, if you feel that, you don't need that much of currency, you can immediately online instantly put it back into your bank account. So that way, you can manage, individuals can manage their cash possession much more efficiently. Now, few points I just want to mention on CBDC. Number one, first point is that it is highly efficient. The payments are instant, like the fast payment system. Second, CBDC is a great way, as we have experienced in India, to promote financial inclusion. Financial inclusion by, if payments have to be made to, let us say, certain beneficiaries of government support, of government subsidy, the government, or even in a private company, the private company wants to make payments to, its employees, for particular uses. So we see a great potential for financial inclusion, and we have recently, in fact, facilitated money transfer from government for, by way of cash support which the government gives to certain poorer sections of the society. We have facilitated that by way through the CBDC mode. The third is that CBDC has the feature of programmability. You can program it in a certain manner that, again, if the government is, let us say, giving fertilizer subsidy, I'm just giving an example, the farmer can go and encash it only in a fertilizer depot. He cannot use it elsewhere. So therefore, government subsidy transfer becomes much more targeted. Even for companies, if they are giving, let us say, lunch vouchers or some, some other kinds of vouchers, it can be encashed in certain pre-designated, points. Fourth, we have also instituted interoperability between CBDC and UPI. The same QR code works between CBDC and the UPI. Fifth, the feature of offline functionality has also been introduced. Sixth, CBDC indeed has, I think, the biggest advantage of CBDC going forward, and the biggest potential of CBDC going forward is in cross-border payments, which we expect that because CBDC will avoid multiple intermediaries, it will ensure low-cost cross-border payment, cross-border money transfer, and faster and instantaneous money transfer. Now, the way forward, and I will be very quick, what is the way forward? The way forward is to have multilateral arrangements, to have bilateral arrangements, preferably multilateral arrangements to begin with at a regional level, and scaling it up at a global level depending on whether the other countries are introducing CBDC. So it can become it can become a model for fast, cheap, and safer transfer of money across countries. What is important in this context is to ensure robustness of design and the safety of the currency. One challenge that we have here is that, in a paper note, the security features, they vary from country to country. But in CBDC, the dilemma will be whether we have common security features across countries or each country will have its own security feature. Now, these things will evolve as the time passes. And the other point which also has to be looked at is that the anonymity of the digital currency also has to be ensured, because the paper currency has a certain amount of anonymity. So if you have to ensure anonymity, you need legal backing, and also you need technological design in a manner that the anonymity can be established. And now, what are the risks in the matter of CBDCs? First, CBDC, because the payments are online, the payments are instant, it can create a situation of faster transmission of shocks. If there is an economic shock in one part of the world or in certain countries, it may lead to a faster transmission of shock to other countries. The second is that it has the risk of currency substitution. When, let us say, one currency of one country and currency of another country, there is a possibility that, one currency between the two will substitute the other. Now, these are risks, and we need to work on this to find methods and measures to mitigate these risks. And these are challenges. I would not call them risks, but I would call them challenges which have to be dealt with. Third, it may also create capital flow volatility because of faster transfer of money across the border, across countries. So these are risks, but I would prefer to call them as challenges of the future, and technological solutions have to be found for this, systemic solutions have to be found for this, and I think all of us need to work together. In conclusion, I would like to say that the future of currency, the future of money will be digital. There is no escape from that, and there is no need to be skeptical about whether we should have a CBDC in parallel to a UPI, because there are two different systems. They can talk to each other, they can become interoperable, and CBDC is currency, whereas UPI is, as I said, a payment system. And CBDC, because of its design features and because of the, the way technology is evolving, it can have multiple use cases. The true potential and the full potential of CBDC is yet to be seen, and it will evolve. And finally, if I can say, I think CBDC and fast payment system working in parallel, they will act as a backup for each other. Just imagine a situation where the fast payment system of countries, due to some reason, there is a technological problem, and suddenly the system gets jammed. But you have as a backup the CBDC to ensure payments, the payments going on in a normal manner. So therefore, they will act as both fast payment systems and CBDC will act as a backup for each other in times of crisis, or if there is a breakdown in one. We cannot rule out such possibilities. It can happen, and we cannot be complacent about it. And we need to, I think, to conclude, the last line I would like to say, I think CBDC has a lot of potential. Fast payment systems have a lot of potential. They have a lot of potential for faster and more efficient cross-border payments. And I think multilateral cooperation in many aspects, in all aspects of this, including design, including, legal arrangements, etc. There is a need for greater multilateral cooperation in this area. I'll stop here. Thank you.
Fantastic. Excellent. Thank you very much. Governor Bailey. Andrew.
Well, thank you. I really want to thank the G30 for setting this panel up, because I think it helps to underline what an important subject this is currently in the world of central banking. I'm going to start with two propositions in the world of payments, which I think attract very broad support, that are important to say, and we've already covered them actually in the previous panel as well as this one. I think the first is that there is a strong need to modernise some key payments practices, and in doing so an opportunity to improve efficiency and reduce cost. And that's true for domestic and cross-border payments. It's true for wholesale and retail. But I think there is a particularly pressing need, and Shaktikanta has just referred to it, in the area of cross-border payments, because progress on modernisation there has been very slow. So we can do more and need to do more on speed, cost, transparency and access to cross-border payments. But it's not limited to cross-border. My second proposition really picks up on what Shaktikanta was saying. In modernising, we have a golden opportunity to harness the potential of digital technology. And frankly, if we don't do that, then I think we're going to suffer a failure of imagination. There is, I think, real potential here for payments in digital technology. If you take areas like solving late payment for firms by, enabling automatic release of funds when goods are delivered. If you take using encryption technology more widely to prevent fraud, these are areas where there is real potential for good. So I think the case for harnessing digital technology is made. So what I'm going to go on after those two sort of opening propositions is to set out some of the implications of doing so, my sense, from an economic and financial perspective. Because, to be honest, I think this area has been somewhat under-examined relative to the technology. And the question, and I am going to strike a slightly different tone to Shaktikanta here, is do we need to fundamentally change the money and banking system to enable this to actually happen? Yeah. That to me is a key question that we must answer, and this is a good group to contribute to that answer. So a starting proposition is that actually I don't see that we need to change the system fundamentally as a matter of principle, But as a matter of practice, there are outcomes, I think, under which it may be necessary. But I think a first best endpoint is, do we need to do it? Not sure we do. So let me start at a few points on what I call the nature and role of money. It's a bit sort of back to basics, but I think it's quite useful. I think, first of all, of course, payments are a key function of money. It's money as a medium of exchange. So, by the way, that's why they're core to the interest of central banks, amongst other things. Second, as Shaktikanta was just saying, we of course have a world where there are essentially two forms of money, central bank money and commercial bank money. And a key feature of this system is that those two forms of money are fully aligned in nominal and real terms. I think the BIS actually developed this term, which is a really helpful term, called I call it the singleness of money. That those two things are aligned is critical to the system. It's critical to the monetary system, critical to the financial system. And of course, it's achieved by a mixture of central bank operations, bank regulation, deposit protection. Now, I would assert that with singleness of money assured, for low value and retail transactions, we should be pretty indifferent at the margin to whether a payment is made in commercial or central bank money. Payment can, of course, be made in something that isn't money, but since it wouldn't have an assured value, this is not, to my mind, really a credible means of exchange. And I think that is, for instance, one reason why we have not seen something like Bitcoin take off as a general medium of exchange, because it doesn't have that singleness of value. But I think it follows that if we are broadly indifferent whether retail payments are made in central bank or commercial bank money, then there isn't in the retail area so much an anchor role for central bank money. But it doesn't mean there's no role. Let me be very clear on this. We have to be clear on this. It's not about a roundabout way of saying we don't need cash. Actually, absolutely the opposite. We should supply cash as long as the public want cash, and certainly the evidence in the UK is that the public do want cash. So we will continue to supply the public with cash. Not an issue. But let me turn briefly to the wholesale payment world and the question of wholesale payment system settlement. Now, there's a risk what I'm about to say I will be seen as contradicting myself. I think I can argue my way out of this one, because actually I do think that in the wholesale world there is a special role for central bank money, and it's in the wholesale high value payments and settlement of those systems, settlement of payment systems. So I think in the wholesale world, central bank money acts as the anchor. It's in that world where the anchor is absolutely critical. And of course that's because wholesale payments and settlement take place using the reserve accounts maintained by banks and central banks. They are directly backed by a promise of the state. They are the core liquid asset of the banking system, and that is the anchor of the system. So if we can be indifferent to where retail payments are made, that's not the case in the wholesale world. And of course, that's long established, actually. This is not a new proposition. It does mean in the Bank of England we're putting a lot of emphasis on enabling digital and other innovation in the wholesale world. We want to see innovation and encourage it. We want to see it encouraged around that anchor of central bank money, consistent with our core objectives of monetary and financial stability. And if you'd like to know more about what we're doing, we issued a discussion paper over the summer where we started to talk about the experiments that we're launching, including offering a digitally tokenized form of central bank money. Now, I think there are two more steps in the argument. This comes exactly to Shaktikanta's point about payments versus currency. I think the first is to ask the question, if we are indifferent on money grounds, whether retail payments are made in central bank or commercial bank money, are we likewise indifferent in broader economic terms? My answer to that was no, I don't think we should be, not at least beyond a very small scale of payments. Another way of putting that question is, are we indifferent to the balance between central bank and commercial bank money in respect of retail activity? Or more directly, why would we want to change that balance? And I would assert that other things equal, we actually shouldn't want to change that balance. Not least because commercial bank money, of course, is used by banks to extend credit directly, whereas central bank money is not. So changing that mix would, I think, at best complicate the credit system, other things equal. And of course, that's essentially the heart of fractional reserve banking, underpinned by the singleness of money. So the final step in the argument I'm going to make is, however, are other things really equal? Are there reasons why in the retail space digital payments need to be done in a newly created central bank digital currency? It's the point that Shaktikanta was very eloquent on. So a priori, I would take a slightly different view and say that actually I think commercial bank money, i.e. the banking system, is the best home for that innovation. But, this is very important, but, if that innovation is unlikely to happen, then central banks have to decide, are they the only game in town, and what do they do? And the fact that we haven't reached a conclusion on that question justifies why, for me, and why in the Bank of England, we're continuing to prepare for retail CBDC. Because to be frank, we haven't yet seen enough evidence that innovation will happen in the commercial banking system. Now, I think we have to, as central bank, be thoroughly engaged to encourage it. But if necessary, we have to step in and be prepared to provide that innovation. Although, I say I am not proprietorial on it. So let me finish just on the point, why might it not happen in the commercial bank world? Why might things not otherwise be equal? Well, I think for money as a means of payment or exchange to function effectively, it has to have two components. The first, the money, is what we tend to call the train, the economic claim, usually on commercial banks. The second, the payment system, is the rails that they operate on, the infrastructure or the technology with which the claim is exchanged. Now, historically, some of these infrastructures and technologies have developed in ways that have somewhat stymied incentives to innovate, including on occasion due to concentrations of market power. It's important that these structural factors don't stand in the way of innovation. For commercial bank money to function effectively, it's got to keep pace with the needs of the users. So our work on retail CBDC is considering these trends in the payment landscape closely. Absent innovation in commercial bank money, central banks may be left as the only game in town insofar as retail payments innovation is concerned. That's not my preferred outcome, but it's one we can't rule out. So we have to go on preparing, but there is a bit of a difference between, I think, here in terms of what Shaktikanta said and what I would say, which may well reflect the differences of our respective countries, that I would prefer to see it in commercial bank money. That's the more natural habitat, but we'll see. Thanks.
Fascinating. Thank you very much, Andrew. Agustín, please.
Well, thank you very much, Mark, for the invitation. Great to have this discussion here at the G30. Let me also give credit to Mark with respect to the fact that we at the BIS have really engaged very actively in technology. When I proposed the creation of the Innovation Hub, a key supporter was Mark, so I couldn't have done it without Mark support and vision. So your vision also was very, very inspiring. Let me build on what Andrew and Shaktikanta just said. I think when we started all this debate in seriousness, like 7-8 years ago, or probably a little bit more, a lot of the discussion was started by the popularity that Bitcoin, crypto, and then stablecoin received. We were challenged. The central banks usually were not challenged with respect of our basic monopoly, which is the provision of money. Now, this is not the first time in history that private sector efforts tried to displace central banks. Eventually, we went through the same story. I think now, basically, in terms of money, legal tender has reestablished its role. And that's because it has come to fruition that there are at least three things that are important that central bank money has, and the money also supported by commercial banks. One is singularity, but the other very associated with it is finality of payments, where the finality of payments is guaranteed by the fact that wholesale payments, but also retail payments are settled in central bank money through the banking system. So also for retail, CBDC money is very important. And third, because I think that we should build on the trust that the central banks and money supported by the central banks and the commercial banking system has there today, and it has really taken many centuries, I would even say, to build this trust. We need to build on that, so that should be the core of whatever we think in terms of money and payments. Stable coins will not really work, at least from my point of view, just to start with, because from definition they are not stable. That's why they have to put the emphasis of the accent on stable. They have to work to make it stable. And I think it should not be able to compete against something that is already stable, and that is the one that is backed by the central bank apparatus that has been put there together. So for me, not only the development of payments, but also for the future of the financial system, we have, and I here fully concur with Andrew, we have to build on the two-tier banking system. I agree with Andrew. CBDC at the wholesale and retail level have a space mostly in the wholesale level. I think it's very important now that we move into digitizing commercial bank money. That can be done through tokenization of deposits. I think that would make commercial bank much more efficient, not only in the payment space, but in many banking spaces. We already in the BIS, we have a project where Bank of England, we are working with the IIF. It's called Project Agora, which basically we're tokenizing central bank money, tokenizing commercial bank money, and the immediate application for this would be cross-border payments. But if we get it right from the point of view of the tokenization of commercial bank money and central bank money, we will have, I would say, a huge pillar for the development of the future of the financial system. Because digitization should not stop at the payment level. I mean, a lot of this discussion of digitization and applying technology has been spread by the idea of inclusion, by the idea of very high transaction costs in cross-border payments. But if we see inclusion, where even though the inclusion figures worldwide are very poor in the payments and the banking area, they are even poorer if you go down the complexity of financial transactions. So I think we can enhance the inclusion in financial activity in terms of sophistication, in terms of granting loans, of bringing saving instruments to broader parts of society, bringing asset markets to society, bringing insurance to society, if we manage to make them more efficient. We have been exploring a way of doing this through what we call the Finternet, and the Finternet builds a lot on tokenization. What tokenization is very important, because through the tokens, you can build into the representation of an asset regulation, cybersecurity, and programmability. The settlement can be made very efficient. It can be atomic settlement that can save huge amounts of resources in terms of collateralization. In the short term, it might need a little bit more liquidity, but I think the savings overall can be compensated, you know. And basically the technology is there. There are three areas where we need to work. One is on the technological area, and we have already unleashed a lot of research in that area. Then we need to work on the financial economic architecture on it, and for that, this two-tier banking system is essential. For me, the next step should be to tokenize government securities. For me, the trilogy in any modern financial system is central bank money, commercial bank money, and government securities. We need to really build that trilogy fully, and it's a low-hanging fruit. If we tokenize government security, even the access to government securities to the population will be far bigger. And then on top of that, we can start building on other financial assets and bring together a financial system that fully embraces technology. I think that the transaction cost would be abated. I think the security can be enhanced, and the efficiency. I think a big problem that we have here, India, I think distinguishes itself because you have developed tremendous systems to leapfrog very quickly, but it's very difficult to achieve what India has achieved. Now, I think the future through tokenization, but even to some extent of the way India has provided, is that precisely it allows to leapfrog. If we go trying to build on legacy systems, it becomes extremely slow and very, 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 very difficult. We have seen this application of technology, the way technology is applied to different areas of society, has been basically by leapfrogging, you know. At some point, you know, you don't use dial phones any longer. At some point, you know, you don't use maps any longer. Everything is in your iPhone. Why shouldn't we aspire that you can do most of your transactions through your iPhone? The technology is there. So I think that we need to have this broader vision. I think it's great that we have been focusing on money and payments because that will establish the foundation. Yep. But we also need to start designing the way forward. Now, how should this way forward be created? It has to be a private-public initiative. Mostly the client-facing system should be private, but also the authorities should provide essential pillars to it. One essential pillar, again, is central bank money, the two-tier banking system that gives us singularity and gives us finality, but we also need to build the rails and the regulation and the legal system to allow all this technology to be applied to the future of the financial system. So it's very ambitious. I think that we should embrace this challenge, but if we bring together public and private sector, I think we can get there. And this exercise that we have started already with the IIF, we have 7 central banks working with 44 financial institutions. Eventually we'll broaden it up, but I think it's of the essence that we start finding the building blocks, the key building blocks that will allow us to aspire on a far more efficient but digitized financial system.
Fantastic. Outstanding. I'm going to make 2 comments, so get your questions ready. The first, which cuts across all the panels, all the panelists rather, and a point Andrew emphasized, particularly building up on the BIS, is this core point about the singleness or the singularity of money, and that ultimately what is money has to be able to be linked back to central bank money. And if we went back 7, 8 years ago, and there's a parallel set of discussions and innovations that go on that do not do that and will ultimately die on the vine, in my view. But there may be some things to take from those innovations that help to deliver this leapfrogging vision that was just described. And so this, I'm going to ask a question and then get from the audience, which is around stablecoins. And the reason I'm raising it, I used to think that the issue ultimately with stablecoins is the only way for stablecoins to be fully stable was to be backed by the balance sheet of the central bank. And if you're backed by the balance sheet of the central bank, aren't you a central bank digital currency? But often with innovation, you have temporary structures that help link into a tokenized world. which is what stable coins today do, private stable coins. And so just how you see them and how you see the time horizon of maybe the pathway where the CBDC steps in. And Andrew, you may have a thought, or Agustín, yeah.
Well, I agree with you. We've done a lot of work on, preparing to regulate stable coins, and we really end up, particularly for what I might call the more systemic ones, we really end up just where you are, which is you end up saying the only way to make them truly stable is to have them fully backed by central bank reserves.
Yeah.
In which case you've got synthetic central bank currency money. But I think you're right. So you may say, well, you sort of dismiss it there, but I think you're right. The question then is, yes, but do you get, it sort of goes to what Agustín was saying, is there some stepping stone by which that's a way to achieve tokenization? Now, I think the challenge we always get back is it at all a commercial proposition if you're sort of restricting it like that? But I think you have to go back and say anything else that it doesn't have that characteristic doesn't have the characteristic of money. That's the ultimate point.
Yeah.
Stable coins, the way they have been presented by and large, try to have two objectives. One is to make money out of issuing money. And that's something that the central bank do not do. We don't try to get money out of, playing with the backing of the currency.
Well, it's, except for seniorage, but.
Yeah. And the other very important aspect is why we need to ask ourselves why at some point it was perceived that we needed the stable coin. Digitally speaking, and here I go to the point you're saying, there is a lot we can learn from the technology that is behind stablecoin and Bitcoin. Now, the real problem is that the representation of money that we provide today doesn't have the technological capacities that in many digital financial transactions is needed. And that is a gap we need to close. So that's why I think that based on central bank money and based on commercial bank money, we need to close that gap.
Yeah.
But technology that has been provided is very valuable and we need to use it.
Yeah, I'll just make a short observation. In fact, I think Agustín has put it very well, that you have to add that prefix of stable to show that it is a stable coin or stable money.
Really
Now,
stable coin,
yeah,
really stable.
I have a fundamental question here, and I have actually a very strong reservations on these stable coins and all that. And the question is, money, currency, has to be fiat currency, has to be currency issued by the central bank on behalf of the sovereign. Stable coin is private money. Bigger question is, are we comfortable to allow a private money to dominate the payment system, or are we comfortable in having the central bank currency, that is the fiat money, to dominate the payment system, dominate the entire ecosystem related to transactions and payments? So I think that is the larger question. And second thing is, where it is central bank money, central bank digital currency, I think this was again a point which Agustín made. I mean, there is no settlement risk. It is a finality. Once I pay CBDC to somebody, it's money.
Yeah.
Whereas there is no settlement risk, and we have seen this merit actually greatly in the wholesale pilot which we are trying. And for example, in the government securities market, we are using the wholesale CBDC for government securities secondary market transactions. So we have found that there is no need for, it's a T+1 settlement. Now there is no need for collateral. There is no also, in fact, now the T+1 becomes irrelevant. The settlement is instant and the settlement has finality. So therefore, the larger question is whether we need private money intermediation to make our payment systems, make our money system more efficient, or something which the central bank can do it. And what is the great advantage that stable coins, the private money has, about which I am very uncomfortable? What is the edge it has, what is the advantage it has over, having a fiat money, a central bank money? I frankly do not see any great advantage. And I see a lot of risks actually inbuilt there.
Very good. Okay, thank you. I'm going to start with Axel Weber in the front row, and then Governor behind.
Thank you. Just maybe one remark. I think it's a very important distinction the Governor did about coins or payments and payment systems. I think where you can add stability is on payment systems, because if the net exposure of these systems are covered by central bank money, you can actually add a lot of stability when these things need to be settled and brought down. And it's only the net exposure that we don't need a full backing for many of these payment systems, where I think there could be a lot of work. Two questions to the panel. The first, you're embarking on this journey, and I think it's a worthwhile journey, Agustín, that you do in BIA. But how you make sure that we're only at the very start of these technological developments, that what you put in place doesn't actually sort of determine who the winners and the losers are, in which direction the system goes. And I think the only way to do it is to provide a minimum sort of platform and let innovation flourish on these platforms, rather than determine with current market players where the direction is. And so that's a question of how you secure that. And then the second one that I have is, where do you see the long game of this? I think you said rightly, and some of you said, well, we want to have a decision whether, or we want to take a view on whether it's a public service and therefore central bank money should do it, or private money. Wouldn't it be better you define the criteria that you as a public sector want to be seen achieved, and then if that can only be achieved by central bank money, then it must be central bank money. If it can be achieved and convenience added by a private solution, then that is at least equivalent, and probably in the eyes of the private users even preferable to a public solution. So I would come from the standards, the protocols, and what you need to see as information attached to payments in that sector, rather than defining the solutions themselves. Thank you.
Okay, great. And if you can just pass the microphone to Governor Yaron right behind Amir, and then we'll get comments and we'll take other questions.
First of all, great
and
panel.
Thank you for your service, by the way, and thank you for being here.
Thanks, Mark. This is kind of related to what Axel just saying, and to what Andrew was saying. He wants to start with wholesale and essentially filtrate into the retail. And at some level, is there a trade-off between interoperability on the one hand, and on the other hand, letting the marketplace and, each institution of these 44 institutions being in Agora, Agustín, if they are going to compete on the marketplace of developing these benefits that you were mentioning? So I can see, the tokenization for government securities, that can be done. But the more you go into different elements where tokenization might help, you might need a niche or a private market, and the benefits for different private institutions to cooperate may be very different, and you find yourself again in the central bank needing to put it on. Thank you.
Okay, so two great questions. So I'll start with Agustín, work this way, if that's okay, and then we'll take two more from this side, please.
Yeah. Technology has advanced tremendously. Some years ago, our concern was, are we going to choose a technology today that will tie our hands into the future? And at some point, we will find that the technology we did today is completely useless. Now, technology is such that you can develop many different systems, and eventually they will talk between each other. The other is that you can also develop a community of developers that will make this work. If you see how the internet and how your cell phone work is due to a community of developers that, following very basic principles, you can build something that works really well, that is secure, and so on and so forth. Some guidance in terms of regulation is important, and in terms of governance is very important, and I think the authorities should concentrate on that. But there should be a very agile dialogue between the authorities and this community of developers. Commercial banks are very important developers. You know, each one of the large banks have 1,000 developers. I mean, I don't know how many. Now, also the system needs to have flexibility to allow other financial services providers to hook into the system and make it more efficient. There will be more competition, that's for sure. Now, what is the final game? I mean, at least this is my own personal view. I mean, it's not the BIS. For me, I think a very important aspiration is that we have a financial system that is more user-centric. Today, when you think about a financial transaction, you think about a commercial bank, you need about a specific product, and you have to go through that. Whereas in many other services, what you think is in the user. You know, what you want is to have a system where you can do as many transactions with whoever you want at any time in any place in the world. That's probably a utopia, but I think that should be our outcome. And I think it's doable. I think it's doable. Now, with respect to your question, I think that what is important, I mean, when you develop a project, you need to start with small, and you need to start with a core group of central banks and commercial banks. Now, at the end, what we are trying to produce in the very short term is a minimum viable project. Will not be operational, but more than anything is perceived as a public good. Because at the end of the day, if we don't generate the networks, it will not work. So there is not the aspiration that those who are today pitching into the development of these projects will be the ones who will be running it. No, that's not the understanding. The understanding, we're going to develop this because it will be a platform to hopefully contribute to the build-up of the network. If that network doesn't catch on, it will be useless. So we cannot think that it will benefit those who are working on it to date only.
Fantastic. Andrew?
So I very much agree with you, Axel, on your second point on the criteria. And I think I very much agree with you on the way in which you sort of ordered the criteria between central banks and commercial banks. Now, I think on both questions, I come back to this distinction I made between the rails and the trains, because I think it's important here. I think particularly, and to be really frank about this, if the rents that are being earned from the rails act to inhibit innovation and act to inhibit competition, then we need a different solution. Shaktikanta, absolutely right. I think you were sort of pointing to this in one of your interventions. And that is why we need retail CBDC on the table. That's one reason why we need it on the table. Because frankly, if the rents are going to inhibit the innovation, to my mind, given what I was saying earlier about I think the case for the innovation is clearly there, then we need an alternative solution.
Great.
Two short observations. Involvement of the private initiative when it comes to central bank currency. I think I see that the private sector will have a role, but only as a service provider to the central bank. Second point, I would like to mention that when it comes to stable coins, I foresee a situation where the stable coins will be dominated by certain big companies, large companies which are located in a set of countries. And if that system dominates the payment ecosystem in individual countries, then that raises huge concerns about individual countries, individual governments losing their sovereign control over their money system. So that, I think, has to be also kept in mind.
Very good. Excellent. Okay, we'll take two more questions. I'll start with Brunello here, and then Stefan Ingves. Actually, we'll take three. Brunello, Stefan, and Piyush Gupta. Brunello has a book just out on this subject, so there you go.
Available
Today, right?
Yes.
Yeah. Okay.
On Amazon or
Yeah.
in UK bookstores.
Okay.
Actually, on the Commonwealth. So 2 questions, if I may. One macro, one micro. So on the macro, so as a bit of a segue to David Marsh on the BRICS currency. We all kind of agree that this is not going to happen anytime soon. It's not even an idea, because where would you put the central bank? Moscow, Brasilia, So it doesn't make sense. However, there's an interpretation of it that could be a bit more interesting, which would be China building the rails, to use Andrew Bailey's definition, along the Belt and Road Initiative countries, and then having the renminbi, all other countries running on those rails. So the geopolitical aspect of CBDC, that would be my first question. The second, on the micro, Governor does talk about anonymity, but in reality, CBDCs would probably protect only privacy. But even privacy is not enough. Some critics of CBDC says what they really fear is that once they adopt CBDC, the government can decide itself to shut a person out of the system, given the programmability. So how would you respond to that kind of critic? Thank you very much.
Thank you. If you just pass the mic down to Governor Ingves. Once again,
Well, first of all, let me say that this is a remarkable panel, because I started talking about these things about 10 years ago, and it would have been absolutely impossible then to discuss the way we discuss today. And kudos to all of you, because back then, basically, I was told, can you just tell your citizens to use physical cash and stop it? And the answer to that is no. But that's not really my question. My question is the following. Actually, what we are talking about here is fiat money. And fiat money is actually decided not by central banks or created by parliaments ultimately at the end of the day, because otherwise you just don't know what you have. And in that environment, it took us a long, long time, going back to the late 1800s, to come to the conclusion that in most cases, and that was in a world when everything was on paper, it would be okay for the central bank to be the sole issuer of physical cash. Now we're moving into a world where everything is going to be digital. And that, of course, raises the whole issue of to what extent it should be possible for the general public to hold fiat money in the form of digital central bank money. And who is to decide that? Is it the political system, ultimately, at the end of the day? Or should it be up to the central bank themselves to come to the conclusion, no, just let's ignore providing the general public with digital currency? Thank you.
Okay. And Stefan, if you can hand to Piyush, please.
Hi. Thanks. If I had to very succinctly try to define the differences, the commonality, everybody agrees there's power in tokenized money. You can program it, it's atomic, real-time settlements. The subtle differences, Governor Das says, let the central bank do it. Governor Bailey says, let's put a threat on the table, have retail CBDCs just in case the private sector in its rent-seeking capacity doesn't want to innovate and doesn't want to do it, so let's have it in case. And Agustín says, let's lean in and help the private sector use and tokenize commercial deposits to create something. So end game is the same, it's just 3 different approaches to how you might want to deal with it. Now, I tend to believe that what Agustin's suggesting works. In Singapore, we have programmable money exactly as you have, sir. We have purpose bond money. We have the government payments going. We have tokenized government. But MAS has leaned in to help us create that with commercial deposits, tokenizing commercial deposits, as opposed to issuing direct central bank currency. So my question actually is more to Governor Das. Why would you believe that the commercial banking sector would not lean in and would require and necessitate the central bank to take that step?
Okay. Great. 3 questions. If you want to comment on the BRICS thing, you can comment, but you don't have to. Let's put it that way. A core question about access, controlling access to the system. Is that a risk that comes up? Secondly, in effect around who decides the limits to access to retail central CBDC, and are there limits on it? And Governor Das, specific to you from Piyush. So, do you want to start? Why don't you start?
Yeah. So I think broadly 3 questions I have noted down, and I hope I have understood them right. With regard to the privacy question that was mentioned, I would like to, you mentioned that government can shut off somebody from the system. Now, why should that impression come? The way I look at it, so far as India is concerned, the Reserve Bank of India Act has been amended by the government, where the Parliament has delegated that responsibility of issuing notes, bank notes, by the central bank. All that has been done is that it is mentioned that the Reserve Bank is competent to issue bank notes, including digital currency. So therefore, already it has been legalized. And we see CBDC as a replacement of the paper currency. So if you have an apprehension that the government can shut off somebody, the government can do it also for deny somebody to avail paper currency. Now that doesn't happen. It will never happen. And you have a legal system. Why should, there has to be some basis on which government can do. It cannot just be a, discretion left to the government. So that is one point. Second thing is with regard to Stefan's point, you said that fiat money is created by parliaments. Absolutely right. But it's a delegated function so far as the central banks are concerned. The government has delegated this responsibility. I'm talking about India in particular. The government has delegated, the Reserve Bank of India has authorized the Reserve Bank of India to sort of issue currency notes and operate the monetary system on its behalf. So it's a, Reserve Bank derives that responsibility, derives that function from the parliament, from the sovereign. The third point with regard to Piyush's point that, why not commercial bank? Now, I'm just talking of paper currency vis-a-vis digital currency. In our system, in India, the paper currency, the notes are printed by the Reserve Bank of India. Then it is supplied by the Reserve Bank of India to various commercial banks, and they then dispense it, they distribute, they give it to their account holders and others. Here the same system remains. The Reserve Bank creates the digital currency. It remains a liability on the books of the Reserve Bank. The commercial banks draw that money and they dispense it to the public, to the members of the public, to their account holders. So it is not in no way different, and it does not in any manner sort of dilute the function of commercial banks. It does not take away anything from the commercial banks with regard to what they are doing today.
Excellent. Andrew, please.
Well, let me say 2 things. On the first question, on the geopolitical question, I think it's a very, very good question and a powerful question. First of all, I don't think there is any good reason to want to fragment the rails in cross-border payments. And I'll be blunter than that. I think those who do want to fragment the rails probably are doing it for very much the wrong reasons. If you think you can avoid sanctions by fragmenting the rails, then A, that's a bad reason, but B, we should be very alert to it. But I think the best way to, frankly, avoid a fragmentation of the rails is to innovate and make sure that the rails are actually, modernised and up to speed. Otherwise, there is, of course, an economic case for fragmenting. That's the issue. So, I think the geopolitical question is, frankly, as a reminder that we need to, frankly, keep the rails. The rails need to be modern, efficient, and operating. Let me go to Stefan's question. It's a really good question and a really hard question. I do think Stefan's right about fiat money. Of course, it does have its central bank money, but the origin, is in parliamentary authority. And I think it is. We've all in our design of retail, well, certainly we have in our design of retail CBDC, and I know the ECB has said we really actually would set a limit on holdings, and that's to do with the risk of disintermediating the banking system, really, which we don't want to see. Now, I have to say, I'm going to say 2 things on that. First of all, I know I'm probably a bit sad in this respect. I get into this question, I went back and reread Friedman and Schwartz. Actually, it's quite good to read because, what you get reminded of is what happens if you have an unstable world where, money shifts between, the commercial bank and the central bank world. And that was a characteristic of certainly the 19th century US system, and it was very unstable. But I think the question that I do have is, if we went down this road of limiting probably setting limits, as we have said we would, what exactly is the authority for that? I mean, it's an efficiency and a risk question, response, get that. But what exactly is the authority to tell the public you can only have so much central bank money? It's a difficult, Stefan's nodding, I think it's a difficult question at root.
Yeah. It's a very difficult question.
Yeah.
It's the kind of question that you can have an intuitive answer to.
It's easy to say,
but then you really need to, really need to think through.
Yeah.
On the Agustín, please.
Yeah, on the first question, I fully second what Andrew said. And let me add just two points. One, technology will not define if a currency is more coveted for others. I think the real issue is what gives value to the money and the usability. And I tend to agree with Andrew that if it's being fragmented and others, payment systems are being developed for the wrong reasons. We at the BIS are working on many of these projects, but none is designed for the BRICS. And as a matter of fact, we cannot directly support any project for the BRICS because we cannot operate with countries that are subject to sanctions. So I just want to be very clear about that. The question of Stefan, I think it's a great question. I fully agree. Now, for me, I think what we should ask from the parliaments is to preserve the options that today population has. And the option that today the population and society has is to be able to have a retail direct liability of the central bank. Today we have it in the form of cash. Now, why, given the technological development, we could not give access to society in the technological representation that society demands? Once you give that option to society, then it will be a matter of competition as it is today. Having in mind that there is a commercial sector and there are others that really will be striving to become far more competitive than central bank money. But I think it's very important to give that options to society. Otherwise, I think the role of the central bank would put into question.
Fantastic. I think that's a perfect way to end this panel, and with ending this panel, end this 39th meeting, International Banking Seminar. I'll just conclude by noting, and this is not a summary, but a common theme. In the end, with money, with all the innovation, the central bank is at the core. Has to be at the core, and the linkage between various forms of money to have that finality of settlement, the speed of settlement, something that would be new, but this singularity, this singleness of money there. And the question is where to set the boundary as you move out towards the user. And one of the things, many things striking about the discussion, but this core point of being user-centric. Ultimately, it's about people using the money and how do we make that, and this potential that exists to be much more inclusive in a much broader sense, not just individuals, but this point you started with Shaktikanta, a broader range of transactions and exposure, and Andrew and others brought it up. So where does the boundary struck? And I'll just compliment the panel, because the commitment, not just the technical expertise of them and their institutions, but looking to find the way to set that boundary that allows for that competition and innovation to happen, so that the users get the users, the citizens, our colleagues around the world, get exactly what they deserve from the financial system. So if you join me in thanking the panel, and then join us for